This is Kitco News special coverage of the Pacific Bitcoin Festival in Los Angeles, California.
U.S. national debt has recently surpassed the $33 trillion mark. And with rates at 22-year highs, servicing that debt is becoming a very big problem and a very big concern. So much so that Ray Dalio, billionaire investor and the founder of Bridgewater Associates, is saying that a debt crisis in the U.S. is going to happen. Let's get some perspective and insight on this with Stephan Livera, head of education at Swan. Stephan bridges the world of Bitcoin and the insights of Austrian economics on his podcast, the Stephan Livera Podcast. Thanks for joining us, Stephan.
Thank you for inviting me, Michelle.
All right, a lot to unpack, but let's start off with what seems to be a very, very big problem, and that is U.S. national debt, as I mentioned, hitting past the $33 trillion mark. We say that as though it's nothing, but it's such a huge number, so much so that the big question is how we're going to service that debt. And to put things in perspective, Goldman Sachs is saying that the interest expense on U.S. debt alone cost the government around $476 billion, or around 2% of the national GDP to pay interest on the debt. Goldman Sachs is estimating that interest payments are set to rise to 3% of GDP in 2024, 4% of GDP by 2030. Interest rate payments also on track to become the largest category of federal spending over the next decade. And according to analysis from the Peter G. Peterson Foundation, an estimated $10.6 trillion will be spent paying interest on the national debt over the next 10 years. I mean, staggering amount, so much so that, as I mentioned, Ray Dalio, billionaire investor and founder of Bridgewater Associates, recently saying there is going to be a debt crisis in this country. As a student of Austrian economics and an expert in the field, is a debt crisis inevitable?
I think so. I think that is exactly the pathway that before the USA. And so quite simply, it means there will have to be some really hard choices. And quite frankly, it seems that the political environment is not amenable to the idea of actually making those hard choices, of actually making a big spending cuts. I think there's a lot of political division in the United States. And because of that, there's not going to be the possibility for some kind of candidate or a person to come up and say, hey, you know what? We've made some mistakes. We need to dramatically cut the spending and dramatically cut the size of the state. That's just not going to happen. And so I think what we are going to see is this continual spiral happen, as you were pointing out. It's becoming more and more as a percent of the United States GDP every year. And what we are going to see is a challenging environment for the United States government from a funding perspective. We've seen China has been dumping US treasuries. We are seeing more of a, what's called, everyone's saying this term, multipolar world, that the USA is still dominant, but just not as dominant as it once was. And that is going to have some impact in terms of debt funding. How many people are still going to be keen to buy US government debt when the reality of it is that debt is being inflated away over time? And this is one of those things where very few people are really thinking about it clearly, because they may look at the property that they buy or things like this, but not think about it in inflation-adjusted terms. And the last time I checked the statistics on this, the base money growth rate from 1969 to the end of 2022, that number was about 9%. That's the US base money growth rate. And the US is one of the, is arguably the least bad of the fiat currencies. Right. And so if even the least bad one is inflating at 9% per year on average, people are basically losing a lot of money without even realizing it. And so it seems to me that that is the likely pathway out of this. It's not a good pathway. I'm not advocating that, but it's rather that I think the state will essentially try to engineer a scenario where they are able to sort of inflate their way out of the situation. And so even if the CPI number looks low, consumer price inflation number looks low, the actual inflation that people are feeling on the street, when they're buying their groceries, when they're paying their living costs, is a lot higher than that number. And so they will do everything they can to mask those figures, to give the perspective that, oh no, everything's okay, or look how great the economy is. And the reality on the ground is very different to that. And I think what we're going to see is a scenario of governments having to, they're going to have additional discipline placed on them by the market. And so that could mean that bond rates have to rise a lot. Bond yields will have to rise because, let me simplify it this way. If you're an investor and you're looking at the US government debt and you start to cotton on to the idea that the inflation rate is above what they're telling you it is, you're going to start demanding a higher yield in return for your funds that you're loaning to the government.
But you earlier made the point that it's happening across the globe and that the US dollar, to use the phrase, is still the cleanest shirt in the dirty laundry basket. So does it actually threaten the dollar's supremacy as the global reserve currency of choice if the other fiat currencies are in an equally bad or worse shape?
Yes, so that's a great point, and I agree there. So it's true that the US dollar is the least bad, and so for that reason, there'll still be a lot of people who just by default will buy bonds. Now, maybe they're not consciously doing that. It may be as part of their pension fund. It may be part of their retirement savings. It may be part of their financial advisor puts them into a portfolio that has the typical stocks and bonds allocation. And so there will be these passive flows into the US government debt because, like you said, it's still the least bad. But I think the thing that changes all of this, though, and probably my big disagreement with, say, Santiago Capital, I believe his name is Brent Johnson, is that Bitcoin changes a lot of this in the medium to longer term. Because yes, it's true that the US dollar is the least bad of the fiat currencies, but now we have a choice. Now we have an alternative to that.
So is Bitcoin starting to gain traction as a viable alternative to that, and on what level?
So I'll be honest, it is still very small, right? As we speak today, Bitcoin's overall market is about 500 billion. That's tiny compared to the global market for equities, the global market for bonds, which are, tens of trillions, maybe even 100 trillion, depending on which market we're talking about. So it is still small. But I think you can get a very big move coming off of a small number of people because it's still so small, relatively speaking. And there will be larger and larger pools of capital, whether they are nation states, whether they are wealth funds, whether they are pension funds, who are maybe not able to allocate a lot to Bitcoin because of how small it is. And so over time, we're going to see this slow and steady growth in Bitcoin. So my view is a little bit more of a longer term view. I'm not saying, Bitcoin is going to hyper Bitcoinize, in the next year or so. But more and more people are starting to understand the problem of fiat currency. I'll give you another example, Michelle. When I first got into Bitcoin and I was explaining Bitcoin to people in 2013, I had to explain what the term fiat currency or fiat money was. I'm less and less having to explain what the term fiat means. More and more people, and I'm sure the Kitco audience understands very well what the term fiat means. And this is a process of normalization of Bitcoin. And I think it will take perhaps a few decades. So Bitcoin today is 14 years and a little bit. I think when you're looking at a multi-decade timescale, it will just be seen like, oh, Bitcoin is just this viable option. If you've been shut out of the fiat system, if you are facing high inflation, you can go to Bitcoin. And yes, there will be these bull and bear cycles on the way, but fundamentally, Bitcoin will start to represent a real shift, a real alternative. And I think one other point I would just quickly add here is that even if you weren't necessarily a devoted, Bitcoin maximalist or whatever, you could still see a benefit to just taking a small position in Bitcoin. You might, for some people, it might make sense for them to even just take 1 to 5% of their investing portfolio and put that into Bitcoin, just because of the overall benefits that Bitcoin can have to your portfolio. So I think it's going to start really slowly and gradually.
Right. But where do you see it in terms of really becoming a viable replacement to the dollar? I mean, in terms of what timeline do you have in mind for that? You said multi-decade. What is that?
Yeah. So
how much is multi?
Yeah. So I think something like 2 or 3 decades from now could be where we might see a bigger, like a very much a mass adoption where there'll be people who actually day-to-day spend Bitcoin on Lightning. Now, I personally do spend Bitcoin and earn and spend Bitcoin, but I understand for most people, it makes more sense as a savings technology, right? You just buy it and you hodl the Bitcoin. So I think, let me put it to you this way. I think on a 10-year time frame, I think it will be very much normalized as savings technology. And then maybe on the 15 to 20-year timeline, that's where we start to see more of an actual medium of exchange usage of Bitcoin. Now, I don't have a crystal ball, but this is just my guesstimate based on how long things have taken and just how long it takes for innovations to become accepted and seen as that's a stable bedrock for me to use and build. Even things like the internet. It took time for people to be comfortable, as I'm sure you might recall and listeners may recall, that people were initially skeptical of doing commerce on the internet. It was, I'm never going to type in my credit card details on that internet site. And now all of a sudden, people do it every day, multiple times a day.
Yeah.
So I think Bitcoin will move through a similar process of that. And so in these early days, and we are still in the early days, it's going to be mostly used as a savings technology. We just hodl it and we save it, and it can represent an alternative to buying government bonds. It can represent an alternative to saving in the stock market, which is what a lot of people are doing nowadays in ETFs, as an example.
So a Bitcoin standard is the
goal.
The goal, yeah. Right? The goal. But with it come few challenges. Like, how would debt work if we have a Bitcoin standard?
This is a really great question, and I've spent a lot of time thinking about this also. I think we're going to see some kind of a return back to maybe how things were in, let's say, the late 1800s in a gold standard. I think there'll be some elements of similarity to that. I think this phenomenon today, where it's very standard that people take out mortgages to buy homes, and it's just a very normalized thing that everybody just takes out debt, that's going to change, right? This idea that we're going to have, people have all this credit card debt, this mortgage debt, maybe even some business loans. I think a lot of that is a phenomenon of fiat currency and of fractional reserve banking. So the Austrians explain this by talking about the difference between commodity credit and circulation credit. So commodity credit refers to when there are people who've actually saved that money and they are foregoing or relinquishing their access to those funds, and those funds are being lent to somebody else. That's a commodity credit example. In a circulation credit example, so that's a different example where new funds are being created ex nihilo. New money is just being created in the act of that commercial bank giving a loan. That is circulation credit. And we are in a circulation credit environment today. So the way I'm seeing it is debt will be a lot less under Bitcoin standard because the purchasing power of the Bitcoin is going to be going up over time. We can think of it like this kind of passive growth deflationary benefit. And so in order to take out debt denominated in Bitcoin, you need to be really confident that you'll be able to make enough back and pay back that loan. So it might make sense. Let me give you a quick example just to sort of contextualize it. Let's say you are a business owner and you're thinking, okay, do I take out a loan to expand and buy a new factory, right, make more widgets or whatever, and I think I can get a 50% internal rate of return, and the cost of that debt is going to be 10%. Well, then obviously, yeah, okay, I think I can make this work. But I think this phenomenon today where it's seen as standard that everybody just gets a mortgage to buy a house, I think that is going to change. I think what's going to happen is houses won't be seen so much like an investment, and they will be seen more like a consumption good or like a lifestyle good. And because of that, the relative price of housing, I think, will drop compared to how much people have in their salary.
Well, housing is seen as an investment because it's a way to protect against devaluation and debasement of fiat currencies.
Exactly.
So you're saying that when there's an alternative to that debasement of fiat or a replacement,
yeah,
that your home as a saving mechanism gets replaced by Bitcoin.
Yes.
And then you see your home as a utility, as shelter that... Exactly. Elaborate on that.
Yeah, exactly. That's exactly it. So let me explain it this way. We are currently operating in this world where, because the fiat currency is just continually devaluing every year, people, whether they understand that at a conceptual level or not, they have been pushed into this system. And it's a cultural thing. It's also a regulatory thing. It's that it's relatively easy to get house loan debt in most of the, let's say, the Western world at least. And so it's a very common thing that people will get out a loan to buy their home. And what that has created is this almost Ponzi-like creation where people use houses like investment. And we see this as well, that, I'm sure in the Canadian market, in Vancouver and stuff famously, and Hong Kong and other famous property market bubbles around the world, like Australia, where I
live in New York, so I can relate to that as well, yeah.
Yeah, so I think what's happened is people have stopped treating housing just as, I need a place to live or a place to raise my family, and it's become, I'm going to do this as an investment. And everybody wants to become like a property mogul and have the rental income that takes off. And so it just kind of creates this weird dynamic where, let's say, younger generations are kind of locked out of the property market, and older generations, like let's say the boomers and maybe the older Gen X people, have had an opportunity to buy those properties when the multiple of their salary was a lot lower. Yeah. So I think so let's bring it back to what Bitcoin is going to do. I think Bitcoin is going to change the way people operate. So they will save with Bitcoin, and the price of housing won't be bid up to these stratospheric levels because there's just no easy availability of the credit required to push it to those levels. And also because people don't need to use housing as their savings and investment. And here's the other thing. A lot of people don't think about all the hidden costs associated with housing, right? They're not thinking about the inflation. They're not thinking about the maintenance costs. They're not thinking about renovation, property taxes, all these little costs that people don't really account for. And so maybe you could sort of make this make sense if you were, let's say, a high-level commercial investor or a high-level sort of investor who can sort of you're a sophisticated debt user, let's say. But for the average person, they are getting screwed over by this system, and sadly, they don't understand why.
Okay, but let's go back to this commodity credit and circulation credit. Do you see them coexisting, or does commodity credit and the Bitcoin completely replace it? Do we still have a Bitcoin standard while there is still some kind of functioning fiat standard that is diminished in its importance, but coexisting or replaced?
So the two worlds will coexist for some time, right? So fiat is going to still coexist. I wish we were on a Bitcoin standard today, but we're not. And so there will be a transition period. And I guess the dynamic I was explaining to you before was if we were wholly on a Bitcoin standard. If you can sort of have both of these dynamics, what we will also see is sometimes, let me put it this way. When you have a fiat loan, in some sense, you're short fiat. And so the more people who go and take out these loans, the more they are inflating fiat currency. And so that can also have this impact of making Bitcoin look even more attractive because Bitcoin has 21 million coins and never more than 21 million coins, whereas fiat is just ever inflating. And so there's this sort of funny dynamic where because people are taking out all these loans, it keeps inflating the money supply of the broad money supply, to be clear, of the fiat currency. So that's the circulation credit system. But I think longer term we'll be in a commodity credit system, and that commodity credit system will be like full reserve banking. Now, to be clear, there may be some people who try to go fractional, as historically people have tried, but the market will impose discipline on them. Why? Because bank runs. People can do a bank run if they think, if you were banking at Bank of Stephan and you thought, hey, Stephan doesn't actually have all the Bitcoin that he should, I'm going to do a bank run. I'm going to take my coins out. I'm going to either take them into your own self-custody or at least to another bank. And that will be a protective mechanism. Bank runs are a protective mechanism to ensure the soundness of the full reserve system. Whereas in the fiat world, you need a central bank. You need a lender of last resort. You need governments that can do bailouts to sustain that system and to prop up the Ponzi.
To prop up the Ponzi, which is becoming more and more evident to people that it is a Ponzi. Elon Musk recently posted on X, formerly known as Twitter, in response to what's a scam that's so normalized we don't even realize it's a scam anymore. And he replied, fiat currency. Now, obviously, Elon is an exceptional individual and not representative of anyone but the top of the top. But are we seeing more and more people become aware that this fiat system around us is failing? Is it becoming more of a commonplace idea that people are starting to really question this fiat system?
So yeah, coming back to what we were saying earlier about the normalization of the term fiat and fiat currency and fiat money, I think to some extent they are. Now, are they all running straight to Bitcoin yet? Maybe not. I think they should, and I think they would benefit from it if they did. But currently, a lot of people are, maybe they're just complaining about cost of living, right? And so maybe from that perspective, they can sort of grasp it. But I think getting to a more deeper level of understanding about why the system is happening, and some of this is just a difficulty of explaining how the fiat system even works. It's just it's a complicated system.
Something they don't teach you at school.
Exactly.
Probably by design.
Right? And people say Bitcoin is hard to explain, but you know what? The fiat system is also really hard to explain. Most people would not be able to explain to you the inner workings of FedWire or of fractional reserve banking and how the credit works. Most people are not aware that the money that they think is in their bank is it's not all there.
It's not even there. Yeah. So I know that you are a big advocate of Austrian economics and the connection between that and Bitcoin. We have a lot of viewers on the show that are proponents of Austrian economics, but are not necessarily seeing the connection to Bitcoin. And you refer to it as a commodity and part of a commodity credit system that you expect to see in the future. And for those that have not been orange-pilled yet, the number one pushback is, how is Bitcoin a commodity? Where is the intrinsic value? So from an Austrian economics perspective, explain the intrinsic value of Bitcoin.
So fundamentally, it comes back to what makes a good money. And I think, sadly, gold, in some ways, and maybe this is controversial for some listeners, but gold failed. It failed to restrain the size of the state. And that's unfortunate. As a libertarian and fan of Austrian economics, it would have been nice. Wouldn't it be nice?
It wouldn't. It didn't fail as an underlying asset. It failed because
in
of
the political sense.
Yeah, it failed. The derivatives spun off it in the abandonment of the.
But let me explain another aspect to that, because gold is hard to transport and it's hard to verify. It made it difficult for people to self-custody. Whereas in a Bitcoin context, it's as simple as setting up a wallet on your phone, writing down 12 words, that's your Bitcoin address, you can withdraw to that address.
Well, there was a time when it was illegal to self-custody gold in the United States, right?
Correct.
But I also get the point that with something like gold, it's a lot easier to have paper derivatives because people aren't asking for their gold back as easily as they can with Bitcoin. If you start to have derivatives off that and a system based on it, in seconds you can ask to see a Bitcoin where it's not a possibility with gold. But back to the intrinsic value question. Yes. Yeah. Where is the intrinsic value of Bitcoin?
So I think the principled answer is that there is no such thing as intrinsic value. As an Austrian, we understand this idea that it's all about subjective value. It's all about subjective value. There is no intrinsic value. And I think let's say the Austrians who are Bitcoin skeptics, sometimes they miss their own theory. They sort of forget their own theory. People like, let's say, Peter Schiff or someone like that who sort of has this view that Bitcoin should have a use other than money. And I think that's wrong-headed. I think we should assess things on how good they are as money. And if Bitcoin is a better money than fiat or gold, then that's the intrinsic value, if you will.
But are we looking at Bitcoin as money or a store of value? Because right now it's sort of conflicting concepts. Like, why would I want to spend my Bitcoin on daily transactions when I expect it to appreciate and maintain my fiat spending ability in a far greater way? Why would it make sense for me to buy a cup of coffee with Bitcoin?
So I'll give you a few examples. I personally do earn and spend Bitcoin, but my general MO or philosophy, but my philosophy here is I earn Bitcoin and then I live within my means. So if I earn this much Bitcoin and I can save this much, I can spend this much and I can save that much, so that I'm on net on a monthly basis, I'm saving in Bitcoin.
But is an appreciating store of value, is it not inconsistent with the idea of a currency for daily transactions?
And so, I appreciate the tension here, right? I would say probably some of the biggest reasons why people don't spend their Bitcoin is, as you said, this number go up factor. Because I expect Bitcoin to be millions of dollars someday, and also in many jurisdictions, the capital gains tax factor. So I appreciate that. But my answer to that is it's a phases thing. So we are going to move through a phase where it's collectible, then a store of value, then a medium of exchange, then unit of account. Now, that framework, I think, helps us understand Bitcoin a little bit better and helps us sort of resolve that potential contradiction or this kind of part that doesn't quite make sense. But there are some people who are further along. So some of us actually do value our net worth in Bitcoin terms and actually use it in all of these contexts. Now, I'm in a position where I can do that. I understand that not everybody is at that level yet, but I think for those people, they can just start with it as a store of value. And over time, because here's the other thing, it's not that there's one person who comes down and blesses and says, now we've moved from store of value into medium of exchange. It's an individual process. You will make that decision, listeners will make that decision, I make that decision when it makes sense for me to start using it as an actual medium of exchange and a unit of account.
All right, so we started off chatting about the debt crisis in the US, which we said was inevitable by all accounts. What does that mean in terms of the price of Bitcoin? Greg Foss, who's been on this show, sees Bitcoin as a credit default swap on upcoming sovereign debt crises. And he has a model that values Bitcoin at 300,000, I believe, by today's standards, right? He's saying that Bitcoin is insurance against looming sovereign debt crises, multiple or singular. If this debt crisis starts to unfold, what does that mean in your mind for the price of Bitcoin?
So for me, it will be a vindication of Bitcoin as an alternative. It's showing people that they can't just trust that the underlying currency of that fiat bond is going to remain stable. Because a lot of people are, in their mind, they think of fiat as stable. They're not realizing that it's actually coming down over time. So even in the Bitcoin and quote unquote crypto world, they use the term stable coin. But the US dollar is not stable. It's actually a declining coin. Why don't we call it a declining coin? Because in their mind, they're thinking of it like a stable thing. So I agree with Greg Foss on this aspect that we can use Bitcoin to protect our purchasing power, to preserve our purchasing power in the context that a lot of bondholders are not really thinking through clearly the implication of what they're doing, because they're giving up all this money now for a very tiny return, but in practice they're losing in net terms. Now maybe some of them are okay with that because maybe they've already made their wealth and they're just trying to have something that kind of sort of loosely declines, right? And not like massively declines. But fundamentally, it will change the way people think about government bonds, and that will start to make Bitcoin more attractive as an alternative.
This is Kitco News special coverage of the Pacific Bitcoin Festival in Los Angeles, California.